Hello everyone and welcome to another of our Trader Talks videos with myself, Richard Perry, Market Analyst at Hantec Markets. As ever, if you're not already trading with Hantec, you can go to our website hmarkets.com where you can sign up for a free demo, or you can sign up for a live trading account in 4 easy steps. Now, as ever, I'm talking to Steve Miley. Hello again, Steve.
Hi there, Richard. All well at your end?
Yeah, not too bad, not too bad. We're sort of still looking at how markets are phasing at the moment, where there's just this risk on, risk off period of trading where markets just don't really seem to know what to do. And I still think that that's an issue, but I think we've found a couple of trades I think that might still be of interest for traders out there this week. And you've been looking at cable, I noticed.
Yeah, well, generally, as you say, their markets have been caught within this risk on, risk off phase in here, unsure between the very positive tone from the markets coming back and looking kind of in a risk on theme, because we've seen the lockdown measures or the unlocking of the lockdown fairly successful on the one hand, but then the spectre of COVID-19 and the rising cases in the US. So we're kind of caught in that neutral ground. But if we look at cable, it's actually trending quite nicely lower in here since really the middle of June. We failed on the rally up at 128.10. We've had a succession of lower lows and lower highs. We now are within this down channel. It's performing quite well within this down channel. We've gotten there, that 122.90, kind of an inflection point there, both previous support and resistance. And I think that was an important break lower through there that we've seen in here over the past week. Subsequent rebound then off of 122.50, having taken out that inflection point at 122.90, and a little pop higher, maybe some quarter end stuff going on yesterday. I'm not quite sure where that pound pop came from, but fading at the channel around 124.00, and I'm looking for it to re-energize on the downside.
Yeah, I agree. I look at the relative performance of sterling, certainly measured against all of the Forex majors, and you can see that it's really negative actually over the last couple of weeks. Really is sort of trending lower, seeing through cable. And I almost picked out for euro sterling on a breakout last week. So it's this general theme of sterling underperformance that we've got through this period of ongoing Brexit negotiations and obviously concerns about the twin deficit problems that the UK still has. And you've got the fact that I think sterling dollar is still trending lower. Now it's had that rebound, and I think the 124 figure is a really important level now. 124 figure was yesterday's high. It sort of backed off from there today. If it breaks above that, it also breaks that downtrend. So it's sort of at a really important crossroads. 24.50 is the next level above that. I think if it breaks above that, that would be confirmation of a big turnaround on a near-term basis on cable. But I would still be tracking, as you are, I'd be still tracking cable lower. I think it's going to be pulling towards the bottom of what I still see as a medium-term trading range. I don't think it's going to be breaking below that range, or if it does, I don't think it's going to be going very far. But I think ultimately it's going to be testing towards the lows again before you see a swing back higher.
So 122.50, and then as you say, the bottom of that range is down at 120.75. So that's a very potential target, I think, going into the early to mid part of July. And just of note as well, we looked at this a couple of weeks ago, and we were right up at that 125.42 level, and it was very pivotal. We were looking at 125.00 to 125.50 area, and it failed there previously. So looking for kind of a redux of that, really, just looking for that to re-emerge those bearish pressures, as you say, with the macro negatives from the pound and the dollar kind of still bid, as we've still got this kind of lingering risk off theme from the COVID-19 cases, which kind of segues us across to what you're looking at. I know you're looking at gold.
Yeah, gold's always been a bit of a favourite of mine. Last couple of months it's been ranging, but that range now I think is now broken to the upside. Finally, I've been waiting for this move for so long. It's had a couple of false moves that have been sort of pulled back, but ultimately this breakout that we saw last week above the 1764 resistance, it's continued higher this week. It's sort of pulled back towards an important level of support actually. I sort of look at the breakout of, you could measure the range maybe sort of 1670 up to 1744, 45 area. Take that as maybe a $75 range. You project that higher, that gives you 1820 area as a projection target. And I think that that's really realistic, given the fact that the strength through momentum indicators we're getting through We're looking at MACD lines now tracking high, stochastics holding strong configuration, RSI mid to high 60s, and these are really important strength of momentum confirmation indicators, which I really do like. And the uptrend that we've got on gold supports the move higher. I think weakness on gold on a near-term basis is a chance to buy. Now, you look at the fundamentals on gold, you still see yields subdued. Dollar has been a bit of a fluctuating play at the moment, so that sort of potentially sort of restricts a little bit of upside move on gold. But I think gold is also playing out as a safe haven as the concerns about COVID-19 have really played out recently, and I think that is driving the move higher. I don't necessarily think it's going to be a straight one-way bet towards 1820 and beyond. I think gold is still going to be a bit of a choppy move near term, but I still like this breakout that we've got on gold.
Yeah, I think, from my perspective, I'd have to agree. And I think you've summed it up there perfectly. You've got the kind of underlying threat of risk off. So portfolio managers are going to be looking at this as a natural hedge for any kind of risk off. And then you've also got the fact that how it reacts with the dollar. And at the moment, the risk off theme is kind of winning out, even though the dollar's staying relatively strong, which would normally be a negative for gold. Gold's managed to break out from this range. And as you say, momentum supportive. It's held that trend line really well in the last week, and it all looks fairly bullish for me as well going forward.
Yeah. And I mean, if you just sort of touch on a couple of the fundamental aspects we've got this week, you've got the PMI data and also the non-farm payrolls report may be creating a bit of volatility, but I think once we're through those data points, I think we're still going to be looking positive on gold.
Yep, agreed.
Excellent. Well, thanks a lot, Steve, again, and we'll speak to you all again next time. Thank you very much, and good luck in your trading.
Have a great trading week, everyone.